Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, including news of withering factories but soaring property prices. Overnight, there was a huge release of advanced PMI data for many economies. The US factory data had already been released a week ago and is very positive, the best since 2010. Their services data was also very expansionary, but the rate of growth slowed there. But that contrasts with today's release of Eurozone factory PMIs, which is at a 13-month low and barely expanding. Every EU economy seems to be slipping. Germany is an 11-month low, UK at an 11-month low like Italy, France is contracting and at a 15-month low. In contrast, countries who have taken their medicine are doing better. Greece and Spain are expanding. In fact, Spain sold 50-year government bonds for the first time, tapping investor appetite for longer maturity debt after its benchmark bond yields fell to a record low last week. These poor manufacturing results have investors all looking to the ECB and their decisions on Friday. Meanwhile, China's factory output growth all but evaporated in August, and Australia saw a further deepening in their contraction. There's been no consistent expansion in Australia's factories since 2010. However, money is falling out of the sky. New data shows Australia's speculative housing boom, which is as big as the last investment bubble in 2003, has continued at a furious pace over the last 3 months, even in seasonally adjusted terms. And to tap into the demand for real estate, the big gains that are flowing from low yields, Commonwealth Bank is about to sell its huge Aussie client base a new real estate fund made up of New Zealand offices, including the headquarters of the ACC. Perhaps Governor Stevens will have something to say about these disparities and distortions in the Aussie economy when he reviews their cash rate later today, but that's actually unlikely. He is more likely to say his policy positions are about right. US markets were closed overnight, so yields are unchanged for the US Treasury 10-year benchmark bond, which is still at 2.34%. Ditto for oil and gold markets. It was not a holiday in London or Frankfurt, but trading was very light there and movement absent without New York. We start today with the currency higher and holding the gains it made after yesterday's better than expected and record terms of trade. We're now at just on 83.8 US cents, 89.8 Aussie cents, and the TWI is up to 79.2. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.